Welcome to Stocks Telegraph, the go-to channel for savvy investors looking to navigate the dynamic world of stock market investments. Today, we're delving deep into the semiconductor industry, a sector that has become the backbone of our digital world. From powering our smartphones to driving the latest advancements in AI and IoT, semiconductors are at the heart of modern technology. As the demand for tech innovation grows, semiconductor stocks present a unique opportunity for investors. The semiconductor industry has seen its share of ups and downs, influenced by factors like global supply chain disruptions, increasing demand for consumer electronics, and technological advancements in computing and telecommunications. Navigating this landscape requires a keen eye on companies that are not just performing well now, but also have the potential for future growth. In this video, we will introduce you to 5 semiconductor stocks that stand out in the current market. We'll analyze their recent financial performances, growth potential, and the unique strengths they bring to the table. Whether you're a seasoned investor or new to the stock market, understanding these key players in the semiconductor industry could be vital for your investment strategy. So, stay tuned, and don't forget to hit the subscribe button and ring the notification bell for more insightful investment content. Let's dive into the world of semiconductor stocks and discover which ones you should consider adding to your portfolio right now. First up on our list is Advanced Micro Devices Incorporated, better known as AMD. AMD has been making waves in the tech sector, particularly in computing and graphics, and enterprise, embedded, and semi-custom segments. Now, let's get down to the numbers that matter. AMD's current price stands at $116.79, showcasing an impressive year-to-date performance of 80.31%. When we talk about growth, AMD is not just playing the game, it's changing it. The company projects an EPS growth of 44.10% for next year. And if that's not impressive enough, their quarterly earnings have grown by a staggering 352.22%. The real kicker came with their third quarter 2023 results, announced on October 31st. Despite the PC market facing downturns, AMD's revenue grew by 4% year-over-year, beating analysts' expectations by a whopping $110 million. This resilience is a testament to AMD's strength in a challenging market. So, why is AMD a stock to watch? They're not just surviving, they're thriving, with a solid foothold in AI and a continued supply of high-performance chips across the tech spectrum. It's this blend of innovation and market acumen that makes AMD a standout choice for those looking to invest in the semiconductor sector for the long haul. That's just the start of our journey into the world of semiconductor stocks. Stay tuned for more insights as we reveal other top players in this exciting industry. Remember, in the world of investing, being informed is key, and here at Stocks Telegraph, we're all about keeping you ahead of the curve. And now, let's shift our focus to another giant in the semiconductor world, Nvidia Corp, trading under the ticker NVDA. Nvidia, known for its groundbreaking work in computer graphics processors and multimedia software, has been making significant strides in the market. Let's break down the numbers. Nvidia's current price stands at a robust $486.20. But what's even more impressive is its year-to-date performance, soaring at 232.69%. That's not just growth, that's a leap. In terms of financial metrics, Nvidia showcases a return on equity of 40.21% and a gross margin of 64.62%. These figures speak volumes about the company's efficiency and profitability. Now, let's talk about growth, where Nvidia truly shines. The EPS growth this year is a remarkable 222.72%. When it comes to revenue, we're seeing a quarterly growth of 101.48%. coupled with an astounding quarterly earnings growth of 849.83%. These numbers aren't just good, they're groundbreaking. But there's more. The market is buzzing with anticipation for Nvidia's upcoming earnings report, scheduled for November 21, 2023. Analysts are expecting an EPS of $3.34, which would be a staggering increase of 475.86% compared to the same quarter last year. And revenue? It's expected to hit $16.12 billion, marking a 171.72% rise year-over-year. The spotlight is on Nvidia as we approach the earnings report date. These figures highlight Nvidia's potential for investors, showcasing not only its current strength but also its future prospects. It's a stock that promises not just growth, but exponential growth. Stay with us as we continue exploring the exciting world of semiconductor stocks. Up next, we have another key player in the industry. Whenever you're ready, let's dive into the details of our next semiconductor stock. Moving on to our next highlight in the semiconductor sector, let's turn our attention to Taiwan Semiconductor Manufacturing, trading under the ticker TSM. This company isn't just a player in the semiconductor world, it's a titan, renowned for its expertise in manufacturing integrated circuits and wafer semiconductor devices. Here's where TSM stands today. The current price is at a solid $96.42. Over the last 12 months, TSM has seen a performance increase of 36.11%. Looking at the financials, Taiwan Semiconductor Manufacturing boasts an impressive return on equity of 30.39% and a profit margin of 41.42%. But it's not just about the current numbers. The semiconductor industry is on the brink of a massive expansion. According to McKinsey, the industry could swell by 80% this decade, surpassing the $1 trillion mark. And TSMC is perfectly positioned to ride this wave of growth. TSMC's real edge lies in its scale. As the world's largest third-party fab, focused entirely on advancing its chip-making capabilities, TSMC invests heavily in research and development. This commitment ensures that TSMC remains at the forefront of technology, making it the go-to choice for companies seeking to produce cutting-edge chips. This strategic position is likely to boost TSMC's growth even further, potentially outpacing the overall industry. Now, let's talk value. TSMC is currently trading at around 16 times forward earnings. To put that into perspective, this is significantly lower than its historical valuation, which often exceeded 21 times earnings. After navigating through the industry's cyclical challenges over the past year, TSMC appears to be in a strong position for growth, particularly as we look toward 2024 and beyond. As we delve deeper into the dynamic world of semiconductors, TSMC stands out as a stock with not just current strengths but also significant future potential. Stay tuned as we explore more about the semiconductor industry's key players. Next up on our list of promising semiconductor stocks is Qualcomm Incorporated, trading under the ticker QCOM. Qualcomm is a major player in the tech world, known for developing and commercializing key technologies and products for mobile devices and various wireless applications. Let's dive into where Qualcomm stands today. The stock is currently priced at $123.85. Analysts have set a mean target price of $138.72, indicating potential for growth. In terms of financial strength, Qualcomm showcases a robust return on equity of 37.07% and a gross margin of 55.70%. The forward PE ratio is at 11.90, which is quite attractive in the semiconductor space. But here's an interesting twist in Qualcomm's narrative: its relationship with Apple. Qualcomm supplies baseband chips for Apple's devices, but there's a significant development on the horizon. Apple is working on developing its own 5G chips, with plans to shift away from Qualcomm's chips by at least 2026. This move could have a noticeable impact on Qualcomm's revenue, as Apple currently contributes to more than 10% of its annual revenue. Despite this upcoming challenge, Qualcomm's prospects look promising. The slowdown in smartphone sales over the last couple of years is starting to reverse, especially in markets like China. Qualcomm isn't just sticking to its laurels in smartphones, it's also at the forefront of emerging trends like on-device generative AI and the Internet of Things. These areas could provide new avenues for growth and innovation, potentially offsetting any future revenue dips from Apple's shift. So, while Qualcomm faces some uncertainties, its current financial health and involvement in burgeoning tech areas make it a stock worth watching in the semiconductor industry. Wrapping up our list of top semiconductor stocks with Rambus Incorporated, known for its innovative semiconductor and Internet Protocol products. Trading under the ticker RMBS, Rambus has a diverse portfolio, from memory and interfaces to security, smart sensors, and lighting solutions. Let's take a look at where Rambus stands in the market today. The stock is currently trading at $62.61, showing a remarkable year-to-date performance with a 74.79% increase. The company demonstrates solid financial health with a return on equity of 34.16% and an impressive profit margin of 63.15%. The EPS growth this year is at 48.44%, and it has a healthy quick ratio of 6.13, indicating strong liquidity. However, Rambus' recent quarterly results present a mixed picture. Revenue saw a 6.1% year-over-year decline, settling at $105.3 million. This includes a 10.9% decrease in product sales and a 3.3% drop in royalties. But it's not all downturns. Contract and other revenues grew by 2.1%. Licensing billings also saw a decline from the previous year. Despite these drops, it's worth noting that these figures still surpass the midpoints of Rambus' previous guidance ranges. So, what does this mean for investors? While Rambus faces challenges with declining sales and royalties, its ability to exceed guidance ranges and maintain robust financial metrics like ROE and profit margin indicates resilience. The company's diverse product range and innovation in the semiconductor space could be key drivers for future growth. Therefore, Rambus remains an intriguing option for those looking to invest in the semiconductor sector. As we wrap up our look at these promising semiconductor stocks, remember that while each offers unique growth potential, investing always involves risks. Do your research and consider your own investment strategy. Don't forget to like, share, and subscribe to Stocks Telegraph for more insights into the stock market. Leave your thoughts and any stock suggestions in the comments. Thanks for watching and stay tuned for more stock market insights in our next video.